with us, Scarlet Fu. Good morning, and good morning to everyone on Bloomberg Television worldwide. With us, Bill Gross, and of course, we welcome all of you on radio. Bill, we see a labor economy. It is directly linked to aggregate demand, something Christina Romer has been talking up. It's also linked to the new normal. This reaffirms a new normal economy, doesn't it?
Oh, it has this month, and it has for a number of months, Tom. I mean, the U.S. is an increasing what we call structural unemployment problem, a new normal structural problem that suggests that our long-term unemployment rate will, at its lowest, and this is a significant statement, at its lowest be 7% instead of 4%. I mean, the old normal was a 4% unemployment rate. We suspect that we may go down eventually if we reflate successfully, but that 7% will be the bottom, and that makes a significant statement in terms of the future of the U.S. economy and the safety nets that will be necessary for it.
You represent a lot of Americans' retirement plans. What policy prescription would you like to see out of Washington when you look at the length, this duration of this slowdown, some remarkable charts on a slow, sluggish recession? What's the policy prescription from Washington?
Well, our policy prescription, Mohamed El-Arian has led this, and other economists as well, Jeffrey Sachs and Bob Schiller last week in the New York Times,
yes.
Threw all three of them together, and they basically suggest that industrial policy or some type of state-oriented capitalism, and yes, I know that sounds anathema, but to the extent that current policies have basically promoted consumption as opposed to specific investment, then all of these people, and PIMCO as well, believe that we must need some type of government-oriented policy that promotes infrastructure, that promotes re-education, that promotes green energy, that is specifically directed as opposed to pushing money into the consumption hole.
Bill, that's all very nice, and green energy and all that. Scarlet, I've been doing like math. It's math time here. Mm-hmm. Bill, I look at the household employment survey. In the last 3 months, we've lost almost 500,000 jobs out of household employment, negative 35, negative 301, and negative 159. I mean, there's an urgency here for the politicians. What would you like to not see them do?
Well, I'd like to not see them hem and haw and basically be divided and wait for an election and then some in terms of their not only policy deliberations but specific actions. I mean, they simply can't produce a coherent policy in any direction other than promoting consumption and extending unemployment benefits. What they really need to do, in our opinion, is yes, harken back to something like the CCC or the Reconstruction Finance Corporation,
right.
Something that sounds so old that it isn't applicable to the modern era, but really would keep and put people back to work in a specifically directed area.
Bill, 285 10-year, 2-year 0.5056 on the 2-year. When does Bill Gross sell full faith and credit paper?
Well, when you get down to 50 basis points on 2 years, basically that's giving you a signal that there's not much left on the table. And so the extension out on the yield curve is what we've been attempting over the past several weeks and the past several months. And we talked about this last week.
Sure.
What you do is you buy 4- and 5-year paper now at the low yield of 1.51% on the 5-year and roll that down. And hopefully, as long as the curve stays steep and as long as the Fed stays where it is, then you produce 2 to 2.5% returns as opposed to 50 basis points.
What portion?
All right, that was PIMCO's Bill Gross. He was speaking with Tom Keene and Ken Pruitt on Bloomberg Radio Surveillance.